So I know you've signed the GFANZ, which is the Mark Carney approach in Glasgow, which is net zero by 2050, but at the same time, you're still financing fossil fuel. So how long will this transition take?
Well, the transition is going to take a while, and we're dealing. Let's step back just for 1 second. Climate change and driving a transition to make our world more green is hugely important, hugely important. But I also think at the same point in time, we have to recognize that we're trying to drive very dramatic change and that we need sound government policy, solid action and activity by private sector market participants, significant capital allocation, especially in risk capital that can really drive technological innovation and change, and it's going to take time. And I think there's got to be a lot of dialogue. I went and I sat in a round table today with Mike Bloomberg and a bunch of other participants here where we talked about a variety of ideas to try to accelerate it, but I think there's a real agreement that while this is an urgent thing that requires attention, we have to be realistic that we're making drastic change in our systems, our processes, et cetera, and that this is going to take some time.
So what does it mean for finance? When is it going to be fully transitioned? And again, if some of these rules are not mandatory, do you worry that they won't have enough teeth?
Well, I can't answer the question when it's going to be fully transitioned. And remember that when we talk about this, we can talk about what's going on in the United States, and we can talk about what's going on in the UK, which is where you and I last saw each other. But what we're really talking about is what's going on the planet. And if you think about the developing economies and you think about some of the big economies in other parts of the world, we really have to make progress, broadly around the world. So obviously I think about the United States where I'm from, but I think about China, and I think about India, and I think about Indonesia, and I think about Vietnam, and I think about Brazil. I think about the fact that when you look at these big economies and the role they're playing, and they're less developed than maybe we are in some ways in the United States. Not all. China's obviously coming along, but the ability to really solve these problems on a global basis is going to take a long time. Now, finance and banks and other financial players are playing a meaningful role. Capital allocations changing. I think one of the things that's having a big impact on markets is institutional allocators of capital are demanding different things from the companies they invest in. And they're thinking differently about the way they deploy capital, and that's having an impact.
And you've committed, Goldman Sachs has committed $750 billion to sustainable investments. Could you bring that up if everybody else does?
We created a framework where we said that over the next decade, we will commit $750 billion to advisory, financing, or investing capital to support a more sustainable planet broadly. And by the way, we define sustainability in a very broad sense. Of course, we talk about climate, but we also talk about inclusive growth. And we have 9 sub-themes that we think are very, very important to make the world broadly more sustainable. In the first year, we did about $156 billion. We track this stuff. We keep track of exactly what we're doing. My guess is over time, if we continue at the pace that we're at, we'll continue to expand that commitment. But that's one of the big ways that we as an organization can have impact is we can direct capital and resources to help companies and institutions drive transition in their business. Yeah. And I think that's our role as an intermediary or a financier.
And where's that transition coming from the most? Is it companies? Is it governments that need support? And what part of the world?
Well, I think I think that there are a handful of things that come up in every discussion that I have with a government, with a corporation, or an institution. And one of those things is climate transition. And so this is a topic that is front and center for all at the moment, and it's coming up in everyone's conversations. I think there are companies and institutions that have a more urgent take on it. I think institutional capital, very aggressive in Europe, moving more to the United States. So there's a different level of intensity in these discussions depending on where you are. But I think the world is coming to terms with the fact that we all have to be investing in the future. And if we don't invest in the future, if we don't plan and think about how we're going to transition our businesses, that ultimately we put our businesses at great risk and our society at great risk.
And is this only because we're seeing, the economic recovery and things are looking brighter and the markets are going higher? Or do you think there's real commitment to go through this transition no matter what?
Well, I think the commitment's real. I don't think this is a function of the market environment. I think the commitment's real. I think sometimes we get caught in a lot of, high-level conversation, and that distracts us from the hard work on the ground, the blocking and tackling and the hard work on the ground, the investments that have to be made, and the need for, thoughtful process. I mean, transition is just that. You can't have a transition without a process. So I don't think this is a moment in time. I think this is real. And if we do a good job, we'll make it more sustained, and we'll have a chance of accelerating it, improving the timeline perspective that we currently see.
When you look at the economy and you look at the markets, apart from inflation, what do you worry about?
Well, I think that we're at a complicated time, because we normally don't have an event like a pandemic that forces us to shut down economic activity, so quickly and so randomly. So we generally don't turn the light switch off and then try to turn it back on. And when we turned it off, it was like a light switch. We went flick. Now it's like a dimmer, and we're turning the dimmer up and slowly bringing the lights back up. And it's not a straight line. Obviously, the impact of the pandemic and the path out of the pandemic is different in different parts of the world and in different locations. And governments in different places are taking different actions based on their own perspective, based on their own experience. Somebody said to me yesterday, and I think it's very, very fair, if you lived through SARS, you've had a very different point of view about how to mitigate this than if you came from a place that wasn't really affected by SARS. And so I think that we're turning the economic environment back on, but because of this crisis, we've had a massive amount of monetary and fiscal policy all over the world that's having an impact. It's having an impact on asset prices. It's having an impact on inflation, as you mentioned. I think markets generally, when I step back and I think about my 40-year career, there have been periods of time when greed has far outpaced fear. We were in one of those periods of time. And generally speaking, my experience says that, those periods are not long-lived. Something will rebalance it and bring a little bit more perspective. Certainly, given that it feels like inflation's rubbing above trend, chances are interest rates will move up. And if interest rates move up, that in and of itself will take some of the exuberance out of certain markets.
But are you expecting some kind of taper tantrum from the markets?
I'm not a good predictor. I've never thought of myself as a good predictor, but I certainly feel like the market anticipates higher rates at this point in time. The question is how much, how quickly. I don't think there's a chance that central banks can unwind this massive stimulus in a way that doesn't create some sort of a taper tantrum or some sort of a real shock to markets. But there's also a chance it can't be done that way. And I do think that people, it's been a long time since we operated in an environment where the general trend on interest rates has been higher and the general trend on inflation has been above trend. I got out of school in the early 1980s, and generally we've had the opposite, for that 35 plus years. And so, I do think people don't remember when Paul Volcker raised interest rates by 300 basis points on a Sunday afternoon. So there are a lot of factors that will go into, how this process plays out. It's unclear, but I certainly think that thoughtful market participants are thinking about it. In my conversations with big institutions, they're thinking about it and they're trying to balance the need to participate and have relative performance based on participation, and what happens as we unwind some of this and we rebalance a little bit.
So are you telling me that you're worried that markets are too cool about it just because they've made money for the last 10 years?
Well, I do think that generally speaking, everyone feels quite smart right now because most of the things that you invest in are going up. That's not the way it normally works. So again, I'm not a great predictor, but my experience tells me this is a moment in time that's probably not a sustainable moment in time.
But then it would be what, an economic shock? So away from an inflation monetary policy, what could it be?
It could be a change in the perspective of the course of economic activity. It could be some sort of a geopolitical shock. It could be that something goes wrong with respect to our emergence from the pandemic and we have a different set of events that change the perspective. But all of this is based on kind of confidence and a forward view. And, I would say at the moment, the forward view is quite optimistic. If it stays optimistic and central bankers, handle the withdrawal in an appropriate way with the right communication, there's a chance we can do it, in a balanced way. There's a chance something could go wrong. Got to be prepared for both.
How do you prepare, actually, for both?
Well, you prepare by, thinking about if the world looked differently, how would it affect different assets, and, how would you feel if things were worth less? Yeah. Not worthless, but worth less. And so in that context, we talk to our clients a lot about different scenarios, and we think a lot about our own balance sheet and our own propensity for risk as we try to navigate those things.
Talk to me a little bit about China. So you're optimistic longer term in China. Do you ever get any pressure from Washington to grow less fast in China?
We're very committed to building our business in China, but in the context of the fact that Goldman Sachs operates, globally all over the world, and we serve governments and institutions and corporations all over the world. And given the importance that the important position that China plays economically in the world, you really can't be Goldman Sachs without participating in that. I wouldn't say there's direct pressure on us to change our long-term plans to grow our business in China. Is it possible at some point in time something goes on geopolitically between the U.S. and China, and because we're a U.S. company, there's either pressure or directive for us to do certain things differently? Sure, there's a possibility. But we think about this with a 10, 20, 30-year perspective, not with a next couple of year perspective. And so we're long-term committed to continuing to serve our clients by having the resources and the capabilities in China that allow our clients globally, to participate in markets.
Do you worry that your license could be revoked at a moment's notice?
Well, we worked for 17 years to get it, and so we've only had it for a few weeks. So I'd like to think we'll hold on to it for more than a few weeks before it'll be revoked. But I think that China, after holding institutions like ours at bay in terms of taking control of our entities in China, I think China wants to grow its capital markets. They want more listing activity in Hong Kong or onshore. And I think the participation of global institutions in their capital markets strengthens their capital markets. And so my guess is they continue to support that, but the world can change.
The world can change quite fast. When you look at some of the shocks, and we mentioned some of the shocks as well, when you look at the prospects of China, how much do you want to grow in China, and how difficult is it to access, for example, talent in Hong Kong and to retain talent in Hong Kong because of the quarantines?
Well, I think it's important to put it in perspective that while we have a business in China and it's a good-sized business and it's growing, it's actually a very small business in the overall scope of Goldman Sachs. Yeah. But given the economic activity there and the size of the economy, over the next 10, 20 years, it could obviously be a bigger percentage, of the business. And so we'll continue to serve our clients and try to allow it to grow. Talent acquisition is an important part of our business and something I've always been focused on. I think that we're a relatively attractive place for people to come work, to grow, to learn, to build a network, et cetera. We hire a lot of young people into our organization. One of the things I don't think people realize about our organization is that 50% of the people who work in our organization are in their 20s. And so it's a very, very young organization. And one of the reasons for that is because people feel that they can learn a lot, mm-hmm. and they can build a great network, and they can get a great set of experience, and that's an important part of our ecosystem. I would say that we're going through one of those periods where it's more competitive for talent than it is in other periods.
Globally?
But globally. I do think that, there are some challenges. China, Hong Kong have a certain approach right now to COVID, and therefore they're relatively closed. This is my first trip to Asia since February of 2020, which would be very unusual. I'd be in Asia, 4 or 5 times a year normally. And I haven't been to Hong Kong or China, and don't expect that I'll be able to go for quite some time. And so, in the context of that, we have a lot of people that work and operate there. Many of them are local Chinese, but many of them hold passports from other parts of the world. And certainly being restricted in terms of leaving or coming back the family pressures, et cetera. That's not a great dynamic for talent, but we're at a moment in time where we're going to have to navigate that. And that's certainly a headwind for global talent in that part of the world right at this moment.
Do you think it'll loosen up?
Well, I think ultimately, it should. It'll have to. I don't think it's going to loosen up quickly, meaning in the next couple of months. But I think economically, and it's just one person's view from the outside, when you restrict travel in and out, when you restrict the ability for people to come and visit, engage, for people to leave to go engage around the world, over time, it has an impact on your economic activity. And so, I'm sure that the leaders in China are thinking about that and balancing that based on how, they are, protecting, their population from COVID and executing on their plan. But at some point, I would assume that we'll get to a different place. I just think they're on a different path and a different trajectory based on their facts and circumstances.
What are you most excited about at this juncture in time?
Well, I continue to be incredibly excited about the amount of innovation that exists in the world. And all the great ideas and all the change that technology and innovation are driving. And by the way, I'm excited about technology and innovation driving change around climate, where we started the conversation. I'm a big believer that we've got to find a path for more risk capital to get into really driving technological change that can help us improve a bunch of the technologies that exist to make our world greener. But we've got to take the cost differential out. And I think we can really make progress. And we can complain about all the things that are wrong, but I'm quite optimistic that we'll do better than people think over some period of time.
And this is coming out of what region? And do we see enough partnerships, for example, on green technology between the US and China?
Well, I think that this is coming out of a variety of different places where people are trying to innovate. Broadly, I do think that one of the great opportunities for China and the West to cooperate, is around climate and climate technology broadly. I think ultimately, though, governments are going to have to partner with risk capital to try to find ways to accelerate and make more investable, certain unknown technologies. And I'm hopeful that that's something that will continue to progress. But I just think the pace of innovation in the world is only accelerating. And that's extremely exciting. And some of the changes that are coming, think about these vaccines are an absolute miracle. They're an absolute miracle in the pace of change and what those vaccines and the technology behind those vaccines can do for other health issues and how we can continue to make progress on a whole variety of issues in the health and bioscience space. Just gives me a lot of optimism about the direction of travel.
Does it change our composition of the economies to a point where actually, that could be a market risk, disruption coming?
Well, it's life expectancy is a positive for economic growth. The more we can improve health and well-being in the world, the more we can get people around the world to participate because of their health and well-being or also extending life, that drives economic growth and economic activity. So, over time, there's lots of opportunity for growth in the world if we continue to make technological progress and continue to advance. And I'm just always, I'm a glass half full guy. I worry as a manager of our organization, I worry about what can go wrong a lot, but I don't wake up every day worrying about what can go wrong. I wake up every day being optimistic about what can go right and then try to mitigate the things that will go wrong along the way.
What do your employees ask you the most? I know they've had, record bonuses? I think the best bonuses.
Well, we haven't paid any bonuses yet because we pay people at the end of the year after the year is over based on our performance. Certainly because our performance is good, compensation will increase this year because we're pay for performance-based business the way our business model works. But, our employees are focused on the things I think most employees are focused on today. First and foremost, they're focused on their health and their safety and their well-being. And I think one of the things that's been very challenging about COVID is just kind of the isolation of society. Generally, I think people are social animals. People want to be out. They want to be with other people. I hear it from our employees. They want to socialize. They want to connect. We're doing, depending on where you are in the world, we've got, a reasonable amount of people back, participated in the office. But first and foremost, people want to be working hard. They want to be motivated. They want their families safe. They want their own, safety, security, and health. And so, we've spent a lot of time, focusing on that for our organization broadly. Secondly, our employees are interested in what's going on in the world, and how Goldman Sachs as an organization is contributing positively to that. And I think all organizations, today have to be able to really articulate how they're trying to contribute to moving the world forward, moving our society forward. And our employees care a lot about that. I think employees, everywhere care about those things.
David Solomon, thank you so much.
Absolutely. My pleasure.